G'day folks, welcome back to another update for the S&P 500 and the NASDAQ. Now our charts have broken through the resistance, at least on the daily, and we've got still a bearish divergence happening on the weekly chart. Before you go any further, make sure you hit that like and subscribe button to support the channel, and don't forget to reference the +1 videos to get a deeper dive into some of the trading strategies we look at. In terms of the outlook, the US equity market is riding high at the end of October 2025, with the S&P 500 delivering double-digit year-to-date gains and the tech-heavy NASDAQ surging to fresh record highs. The rally is underpinned by solid earnings, particularly in information technology and financials, and upbeat inflation data that boosts hopes of further interest rate cuts. Nonetheless, the backdrop isn't risk-free. Trade tensions, most notably between US and China, stretch valuations, especially in tech, and policy uncertainty, monetary and regulatory, all loom as potential headwinds should sentiment reverse. So first, looking at the weekly chart for the S&P, you can see here the price has risen further since our last update, and we just extend that trend line on the price chart. Still a bullish move on the weekly. However, on the weekly CCI, it's risen slightly, but it's still a bearish divergence. So just be cautious of that. We might see a pullback anytime. Again, it could be just a small retrace, or it could be a bigger move. We don't really know, but that's always worth considering. On the daily chart, again, you can see that it's broken through that resistance we had previously, and now we've got a new resistance to identify up there. And again, that could easily be breached again, but notice the CCI is slightly pulling back, and there's no divergence happening currently on the daily chart. Looking at the 1 hour chart, we've got again a bullish move on the price, but notice the CCI is dropping off. That's a bearish divergence, and I've drawn a target range there, a Fibonacci retrace, and that goes from that high down to that significant low before the divergence started, and that's at 38% retrace minimum. We can expect the price to pull back should it drop from there. Of course, the price could keep rising. We can't really tell 100%, but so long as the CCI keeps dropping and the price keeps rising, we're going to consider that a bearish divergence. So according to the daily chart, we take long entries only. And this is the 1 hour chart for the back test. So you can see that it's done quite nicely, averaged down a few times. Now let me zoom in for a moment. You can see here, whenever the CCI and the price are in an uptrend, you take long entries and you close it out when both CCI and price moving averages start bending down. Again, long entries, let it go then. And now notice here, you'll notice there's a bearish divergence, declining CCI versus high highs on the price. You can let it go. Again, just be very cautious of a sudden drop on the price, in which case it finally does it there. It reaches a peak and it drops off. Some of these areas here could have been the start of a decline. You could have closed it out at that point there. Let me just zoom in a minute. As well, during that period, you'll notice the price broke down. So yeah, you could have closed it out there and you still would have been in profit. And wait for the price to start rising again, which it did there, and so did the CCI. So that's where you let it run long. And here you'd probably close it out again. Again, where we are at the moment, as I said, on the hourly, we've got a declining CCI versus high highs on the price hitting that resistance. That's a bearish divergence, and according to this backtest strategy, there's no positions open at the moment, so that's a positive. We'll wait for a further break to the upside before taking any long positions on that one. So looking at the NASDAQ on the weekly first, the price is very bullish above the moving averages. We did have a double top here on the CCI previously, and that was a bearish divergence. Now that since then it's risen past that previous high, so we're going to invalidate that bearish divergence according to that rule, in which case we'll delete those lines. That means there's no divergence currently in play on the weekly. So again, bullish momentum on the weekly, taking long trades only. On the daily, again, we had another bearish divergence here with a double top. The CCI has risen, so has the price, so we're going to delete that bearish divergence trend line. So no bearish divergence at the moment, in which case we'll delete that as well, that target range. So, and that's also risen through that previous resistance we had at 25,190. Now that's still rising. Probably, I'll just move it for now. That could be a new resistance possibly, but I'll see how it goes in the coming days. But we're looking at the CCI possibly reaching a peak there and maybe starting to turn back, although the price isn't showing any sign of weakness yet. On the hourly, Now this is showing similar to the S&P. We've got a bearish divergence on the hourly. So you've got lower highs on the CCI versus higher highs on the price. So again, that's a bearish divergence. And if we were to draw a target range on that, Fibonacci target range, we'll take it back to that low there. Now, very likely the price is going to keep rising from there. I'm not saying it's going to reverse now. You just need to be mindful of these bearish divergence, this pullback potential. So again, a bit early to call it yet, but that's where we are at the moment for the 1 hour. Now, if we go to the back test, zooming out, you would have been going long pretty much from this point on, around about the 23rd or 4th of April, according to the daily chart. This is the 1 hour. So again, similar sort of pattern. Take long entries when both the CCI and the price are in an uptrend. Look out for any divergence. You can see here, for example, we had a bit of a drawdown, and you would have avoided that, obviously. If I zoom in, you can see there the price and the CCI are rising. We had a bearish divergence. Then finally the price fell off, and the CCI and the price moving averages both started falling off, and you would have closed it out with that profit up there, and you would have avoided that drawdown. You could have possibly taken that little rise there, but you notice there was a gap up. So that was well, not a gap up, but a pretty sharp rise in that 1 hour time period. So you probably would have missed that trade. But generally, you go long when the CCI and the price are in the same direction, and avoid going long, obviously, when the price and the CCI are declining, where you can close out your trades with a stop loss. And where we are at the moment for the hourly, we've got as I said, I've got a bearish divergence. You can see they had a bit of a spike up, opened it, closed it in almost immediately with a very small profit. But at the moment, you've got no trades open because the CCI is dropping off, even though the price is still potentially rising. For some added benefits from trading shares, why not subscribe to the Patreon page, where we look at various stocks each week. We run a bullish scan, and these are some of the trades we've taken previously. So these are all closed trades, and we've generated 9.65% since the end or the near end of September this year. So a bit over a month of trading, we generated 9.65%. So again, go to the Patreon page, links in the description below. Hit that like and subscribe button. Thanks for watching, and see you in our next update.